All right, guys, here we go. Wednesday, June 16th, and we're going to be looking at the U.S. market, stock market, starting off with the Dow Jones. And as you can see, we've been in this long-term uptrend channel. Really, the first hit here was the end of October of 2020, and then we came up here and made a double top. We couldn't even retest our all-time high. The all-time high came on this wick topping tail to the upside that hit our uptrend line. Okay, and we came down, got actually under the 20, did a pivot, came back up, retested this area again, and now, which I'm very surprised that we have a huge time count here of red candles to the downside, and then also we're under the 20 and this long-term uptrend line that started back in the end of October 2020. So if we break this next support zone, we do have a little consolidation zone right here, as you can see, sideways price consolidation zone that we broke out of, came back, retested it, actually closed under it, and then they came in, supported, retested this low pivot once again. And then we're really, with all these red candles, we're expecting at least a green pause candle, kind of give a little relief rally in the markets, but we haven't seen that yet. That hadn't come in, but we're expecting it. But once it's done, that next little dead cat bounce, oversold rally, whatever you want to call it, then we anticipate a continuation to the downside. Then once we break this line, of course we'll come up, which always happens. Actually, this should happen first. We broke this uptrend line, and high probability you go down and then you come back up, retest it, because previously it was support. Now it's probably resistance at this time, and then it falls to the downside and then come back up, retest it, and that's how you get your M formations to the downside, because you have a high, a lower high, and then a low pivot, then actually a low pivot, and you just keep pushing to the downside. So anyway, there you go. And then the transportation, it's another little key indicator of the strength of the market, strength of the economy, and it's broken under that low pivot here, similar to the Dow Jones, but we're just consolidating here. So it'll be interesting to see. The longer you consolidate, the stronger, the faster, the harder the break to the upside or the downside. So we'll see which way this thing breaks. Should be coming up pretty soon. The S&P 500, the SPX, yet again inside this long-term price channel to the upside. Did a little double top up here to the all-time high, broke out, made all-time highs. Now we're back under this pivot, little double top area from the 1st of May this year, and actually closed under, but they saved it. It's over the 20 and still just over this long-term trend line support right now. But again, just like Dow Jones, we break it, we'll probably come back, retest it. There's times price gets back over a resistance line or a previous support line that becomes resistance. That does happen, but more often not, you hit it and then that line is or confirms resistance, and you roll over, waterfall to the downside. Okay, so our first safe zone, safety net, so to speak, is right here, this high pivot, little consolidation area here. Let's see, that 4,000 171, and then you lose it, and we'll come down here, retest. I need to put one down here. Retest this pivot, kind of like we were looking at on the Dow. I just call it 4,000. Well, no, it's just keep it where it is. This, as you have this red candle close, and then we'll wick perfectly into it. So if that gets breached, then this high pivot area here, and we could even come down and test this the 200 simple moving average, and just from there, that's well, about a 6% move, and then where we are from today, that's a 10%. So yeah, we could easily fall 10% in the markets coming up. The NASDAQ holding in this upper level here of our previous little double top area. We snuck close to candle just over it, but came back under it, closing candles under it. But we're still above the 20, still above this consolidation zone, low pivot area, then high pivot. So this blue dash line is near term, relatively strong support, especially with the 20 coming up into it as well. And then kind of looking at the housing market just for a second, that IYR, the ETF real estate, U.S. real estate, we were consolidating here. And then, like I was saying earlier, when you consolidate, it will break, up to the upside or to the downside, and it generally runs, pretty strong one way or the other. And then here we are today. We closed, under it. So we'll probably, I would say we're definitely, 100% chance we come down and test this 20, probably even wick into this uptrend line. And that might be a potential buying opportunity for another little push to the upside before we finally roll over, like here up. We might, depending on how far up we go, it might come up. That was support, now is resistance, and we'll probably come back and roll to the downside there. So, and then let's check the dollar. And the dollar had a heck of a day, big blowout candle here. As you can see, they were consolidating in here, buying it up right here. Now we know why it was trading the way it was, okay? Then we were in this downtrend channel, seemed like forever. And then it kind of held support in here, got up over our little double bottom area, that blue dash line, and the 20. Consolidated really nicely in here. Apparently that was a what am I thinking? Accumulation zone, and then just broke out, closes the high of the day. So good on the dollar. Let's see right quick where it could go. Let's see, we're just going to pop a fib line from the high to the low here. And okay, we're already at the 50% zone, so that's okay. I'm going to say it best before we get a rollover or pullback. This, I'm going to make it red along with the 0.618 fib retracement right here, about 91.92. We have the 200 there. As close as it is to price, it might not be too much of a what am I thinking, resistance, but at the same time we put in a heck of a candle. So I'm thinking we do pull back, a couple of 3 days, maybe through the end of the week, put in like this low down here, higher low, then try to get over that 0.5 resistance. That's pretty strong resistance, as well as the 200. If you put the size of the candle, number one, number two, the 0.5 fib and the 200, all those three factors, it's looking like we're going to get a pullback, at least for a couple of days, and then try to run up and over this resistance area, and then we'll come into this sideways consolidation zone that was resistance for a number of days. Finally got over it, then came back through it, and then the 0.618, as you're going up, it's the strongest resistance on the fib, and then coming down is one of the strongest support areas. Is supposedly the golden ratio there. So, and of course, before we even go to it, gold got a pullback, but this is kind of crazy. This is the daily chart here. We came up, we came down from this high to this low, ran back up, And then we put, popped the fib line in, and it came up, see, to that golden ratio, that 0.618 resistance, plus it put in a bear flag. So that was like a 99% chance you're going to roll back to the downside. And then, man, today got really blown down. And then all this was bought back up. But then apparently, and after hours trading, it's back down here, so there's a gap. That's pretty crazy. I wonder if it shows up. No, that's weird. I thought it'd be a gap there. That's insane. Okay, but you see what I'm saying? You have a wick here on the daily, and just a small bodied candle here, and with a wick like that and that small bodied candle, most times you get a little push to the upside. At least come back up here into the whatever moving average just above it, then you roll back over. That is just really crazy. Of course, this is the gold futures. It runs perpetual at COMEX, so anything is possible, I guess, on that. But you know what I'm saying? That's weird that the price started out back here, and then we can't see the gap where it dropped down on anything. See, it's all consistent. Even the 5-minute chart's all consistent action here. But okay, let's go to silver. And yeah, I got same thing. Got smacked down today. We see this up channel, price channel consolidation, slant to the downside. Now it's trying to make a little push upside. What's our copper doing? Okay, we were in this long-term up channel, price channel, the upside, and then hit our high up here, topping tail here on the last candle of the recent high, and then we've been in this downtrend channel ever since. Big slam down yesterday. This was going to be resistance. Matter of fact, I'm going to make it red because that's confusing. Resistance right here was support, got under it. So we'll see if we can get back up over there without coming down and hitting our near-term support line and the bottom of the channel here. Okay, you see that down trend line here. Okay, but okay, guys. Wow, this video went a long time. Apologize for that, but thanks for hanging in there and watching. And as always, thanks so much for being members, and we will see you on the charts.